Hey everybody, welcome back to my channel and welcome back to my live stream. Today is December 19th and we've had the second day this week of stock prices going up, and we are through 7 weeks of positive stock gains. We're working on week number 8. We'll see if we get there and make this week a positive gainer. I can't remember when we've had such a winning streak, and it really, came in at the right time. I'll talk about why I think it's going to continue on. I think we've kind of made it to so late in the year that it's likely going to continue. And I'll tell you why. I'll go over a few factors that I've seen that have really propelled the market, a couple areas of investment that are really catching my attention, and I'm putting capital to work inside the market. So I'm going to go through and just review the market, see where we're at, and we'll go from there. See that some people are joining. Thanks so much for joining. So the markets, starting with the S&P, were up a little bit today, 0.59%. The NASDAQ was up 0.66%. The Dow Jones 0.68%. The Russell, made up of small mid-cap stocks, was up 1.94%. So I've really seen the Russell really pick up here late in the year. The VIX was down. We want the VIX to be down. The VIX was down, which means that investors, the fear index is down. So investors are comfortable investing at this time. Couple observations out there that I wanted to call out. The S&P is near an all-time high. And I'm going to hit the charts later on and kind of show that we're just trying to get back to where we were at the height of, I believe, at the end of 2021. So I know that it's fun to have a year where we're up so much, but in a lot of ways, we're just kind of getting back to even from where we were close to 2 years ago. So that's interesting to look at. Something that could really derail the economy, especially in Europe and the Middle East, and is the Red Sea. There's been conflict on the Red Sea where shipping container boats have been fired on, potentially oil tankers as well. That could really disrupt the energy markets. Oil prices could really take off, and then shipping rates, those could take off. And also it could disrupt goods getting to markets in Europe and the Middle East and other parts, and that could drive some inflation in that region. So I thought it was worthy of noting that if that continues to be a problem, like we experienced the supply chain shortages a couple of years ago, that same thing can happen if this issue really continues to grow in problem. Consumers are spending on goods and services. Reports are coming in that consumers are freely spending this holiday season. And the consumer makes up most of the economy here in the United States. So that is an important factor to consider, that, hey, anybody who's a retailer is probably going to do well this holiday season. The consumer is traveling. The consumer is spending money. The VIX is staying low, making it an up market for 7 weeks plus 2 days. So that's all good for an investor, seeing our investments go up. And last is the Russell 2000 is performing the best out of the indexes for the past really 45 days. It's been doing great. So if we look at the performance year to date, the S&P is up 24.69%. Excellent year. I'll take it. The Dow is up 13.34. The NASDAQ is just really doing well, 44.44. And the Russell's up 15.43. The Russell hasn't done all that great. If you look at, I believe it's the orange graph. But more recently, in the last 45 days, it's really taken off, 23.46. I think that's an area that continues to get my attention, to find small and mid-cap stocks that are going to continue to perform and do really well. Over the last 45 days, The Russell 2000 is like the fastest appreciating index. The Dow also did really well. These are dividend paying stocks. These are more of the traditional stocks. The NASDAQ did okay, and the S&P did okay. But I think the story is the Russell 2000 and the Dow have really started to accelerate their appreciation. And I think there's a lot of room to go because they didn't do as well as the NASDAQ. They didn't do as well as the S&P. And I think some of those stocks, especially the mega cap stocks, the Magnificent Seven stocks, I think those are going to struggle at the beginning of 2024 and maybe throughout 2024. Just looking at what kind of market are we experiencing in 2023, we're up 24.7% year to date. Only 7 years in the last 29 have been better. So most of the time, we're not doing this well. PE ratios, we're at 24.59 is the average for the S&P, and only 9 out of the past 30 years have been higher. So chances are 2024 isn't going to be as good. It's just, numbers, the law of averages. But who knows? Maybe we'll go back to back. But it's great that we've had a really good year and made a lot of gains in 2023. So feel free to ask questions. If you have any questions, we'd be happy to take some questions for you, man. So one thing that I've seen is acquisitions are really picking up. And I think it's because these small mid-cap stocks are undervalued, and the larger companies or private equity groups are buying these companies because they're underappreciated. Macy's received a buyout offer. Another example would be Occidental Petroleum is acquiring another oil company, and so is Chevron, and so is Exxon. So the acquisitions are really picking up. Moving on to a different industry, AbbVie is acquiring 2 companies. One of the 2 is Immunogen for $10 billion. Again, they're acquiring these small and mid-sized companies because they have really good valuations. The last example is DocuSign. DocuSign is the story that broke Friday, is looking at, a sale from a private equity group that is looking to buy DocuSign, potentially taking it private and then issuing out public stock at a later date, trying to make money on DocuSign. So to me, it's evidence that small and mid-cap stocks are underappreciated, and they're going to be really good acquisition targets. Now, as we go week after week, we're at week 7 of the market going up. We're 2 days into this street. This week would be week 8. And for 2 days, we're up. So I don't know what's going to happen for the next 3 days, but my guess is it's going to keep going up. And a big factor is because it's been a really good year, and investors would, if they sell a stock where they made money, they're going to pay taxes, and they're going to pay them at the beginning of 2024. But if you wait until you sell that position, you wait, let's say 3 weeks, and you sell it in early January of 2024, then you delay your tax payment by basically a year. You'll delay by 12 months. So that's pretty attractive, because if you look at some numbers, let's say as an example here, you sold a stock and you realized a $10,000 gain, and we'll just keep it simple. It'll be a long-term gain. In California, you'd pay roughly $2,800 because you pay the federal rate for long-term capital gains and then the state rate. And you'd be paying that $2,800 in early 2024. But if you just waited 2 weeks and sold in early January, you'll postpone that payment until 2025. And you can keep that $2,800 invested in the market. You can put it in a bond. You can put it into a money market account. You can make money on that $2,800. And I know a lot of investors think that way. So I think that's a good reason why you're not seeing a sell-off just yet in 2023, is for tax reasons. Hey, let's hold off and not recognize a big gain until January. That's one theory I have. I've heard it and seen it online. I've seen a couple of videos on it of people having the same thought that I have. So there might be that might be one reason why we're seeing this market continue to go up without a lot of down days. Looking at sectors, the number one sector now, or the number one sector for today is energy. And energy's had a terrible year. It might be second to worst place. Utilities was worse. But it was good to see energy back. I think oil prices picked up. So that's what led energy to be the leader of the day. And I think there's going to be, I think, good value for 2024. In 2024, there'll be good value in energy, principally because it just didn't do much in 2023. And all it takes is oil prices to rally and energy becomes really profitable. So we'll see where it happens there. Communication services, and that's where Meta and Alphabet, they're in that sector. It did really well. I saw the Meta stock pick up quite a bit today. I think that's what drove part of that gain. But overall, this has been a really good sector this year. It's done for the year to date, it's 52.69. I don't know that it's going to repeat that. It'd be hard to imagine that, but we'll see. We'll see if it can repeat it, and we'll take all the gains that they've given us to this point. Looking at some stocks that really worked today for me. Robinhood went up 10.39%, and it's been really working this year. I picked it up, and I've been buying shares, and especially over the last 2 months, it's just really doing well. They're doing a lot of things right with Robinhood. Now that we have, hold on a second, I've got a question, one sec. So energy and utilities are how I'm shifting into 2024. Yeah, so it looks like Bone Wolf, moving into energy and utilities wouldn't be a bad idea because they're beaten down. And again, all it takes is a move in the energy markets, oil prices, and they'll really begin to get a very profitable. The other comment I would have on utilities is utilities tend to have a lot of debt. And I think they were beaten down partly because of the high interest rates. But now that we're seeing interest rates come down, I think that might help utility companies as well in 2024. That's a good idea. I hope it really works for you. All right, back to our stocks. So that's Robinhood. It's really worked this year. I'm glad it has. The other stock that's really working is Enphase. Enphase is just really taken off. In the last couple of months, it's up close to, if not exceeding 50%. It just really took off. And it really happened when the interest rates really went down. It made, the thought of solar selling in 2024 that much more attractive because it's a heavily financed purchase for a homeowner when they install solar. So the lower interest rates really benefited Enphase. Overall, Enphase has been growing. They are still a cash generating company, but now I think they're going to do even better. Coinbase is my number one percentage gainer this year. It beat out Meta. It's up 330%, and it was up again today at 5.03. Catalyst Pharma, it is a really neat company. It's not the biggest pharmaceutical company you can find, but they're profitable, growing, generating free cash flow. So I really like that company, and it was up 4.4%. Here's I'm going to call it a penny stock, Big Five. It was up 2.67%, pays a high dividend. It is a risky stock, but it's good to see it went up. Stoneco is a big winner for the year, and it's up again, but that stock in particular over the last 3 months has just had a really, really great rise. And they are primarily a financial fintech company down in Brazil. I invested in banks in 2023, and it was good to see Citibank go up 2.5%. They are the biggest bank I own. They pay the biggest dividend. Why do I own Citibank and not JP Morgan or Wells Fargo or Bank of America? Citigroup has a lower PE and pays a higher dividend. So I thought they just provided more for me. Good to see PayPal is up. And I think PayPal has been moving upward for the last month. So good to see that. And those are my biggest winners that I go over. It was a good day for me. I am invested in small and mid cap right now. I'm invested in financial services. I've been buying into industrials, materials. Materials really moved today as well. And I think that's all paying off. All right. So, some expectations that I have for the remainder of December, and these are all guesses. I don't want to pretend to know what's going to happen, but let's just have fun with it. First one is there's no more significant news remaining in 2023. The Federal Reserve spoke. They made their decision on interest rates. That was huge. We've had some economic data that's showing that the economy is doing okay. We shouldn't have a very bad recession. We should have a light landing or soft landing if we do have a recession. So there's no more news in 2023. So I think we're going to keep the market should continue to go up because there's no more news event. Small and mid cap stocks are going to continue to rally, better than large caps. And I think just because they have more room to go. Sector rebounds, similar to, the energy and utilities sector. I think they're going to perform better than sectors that really performed great in 2023. It's really hard to repeat, but some certain sectors, especially the ones that benefit from lower interest rates, should really do well in 2024. So I'm looking for more and more investments in that area because I think as I shift from what worked in 23 to what's going to work in 24 and having that type of shift into better sectors for the future. And for the rest of the month, I expect stock prices will continue to go up. I expected a good pullback, but at this point, we're just so close to the end. As I laid out those factors, I don't think we're going to have that big pullback. So it's been a fun 7 weeks and counting. It's good to see stocks just go up and up. We'll see when the party ends, but I'm not expecting it till January. I guess we'll pay the price in January for having such a good market. So any other questions that you have? I'd be glad to take them at this point. All right. So for a few more minutes, I'll just cover a couple of things that I thought were interesting. So first, here's the S&P for the day. It was up 0.59%. For the year, it's let's see if we can get this to update. For the year, the S&P is up 24.77%. But if we look at the 5-year and we look at the previous peak, which is right here, and that was December 23rd of 2023, we are just flat. We're even with the previous high. So we've covered pretty much 2 years, and we just got back to even. And that's because from the peak to the trough in 2022, the S&P went down almost 25%. So we're back to even. It's good. I stayed invested during this period here, actually invested more. And it's really benefiting me now because I have more shares of stocks that I really like, and it's really rallied here in 2023. Looking at the Russell, so the Russell, 1.94 today. For the year, it's up 15.61. But let's look at the 5-year, and you'll see something interesting, which is that if you look at the previous high to the current index level, we're actually down 17%. So the Russell 2000 has a ways to go. I think part of it is that when the Russell 2000 came down, it really hasn't had that upward long-term appreciation that you saw in the S&P. In fact, I can compare the two. And you can see where the S&P did go down. You can see that the Russell 2000, the S&P were somewhat trading together, being separated for a temporary time, and then one being ahead of the other and flip-flopping. But once we got into 2022, we went down. And then in 23 is where the S&P just really took off. And I think it's those magnificent 7 stocks, the mega caps, that caused the real big gap between the S&P and the Russell. I happen to believe that the Russell has more room to continue because a lot of these stocks have low PEs. They are operating really well. And I think the Russell 2000 rally has more room to go. And I think it'll continue to rally into 2024. All right. So any other questions? Well, I appreciate you watching. I'll hold for another 30 seconds or so. If I get any questions, I'd be happy to answer them. If not, I'll end the live stream. I really appreciate everybody that joined. I appreciate the question. And I hope you guys are doing really well with your investments. It's been a fun 7 weeks to watch, stocks go up week after week. And it should be fun to close out 2023. All right, so there were no other questions. So thank you so much for joining. I really appreciate it. Again, good luck investing out there, and I appreciate you attending the live stream.